Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Tuesday the 30th of April 2019. My name is Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off with a look at the overnight changes and price moves to be aware of. And to be fair, it's been a pretty quiet session over the last 24 hours on the global foreign exchanges. One or two points to bring to your attention overnight. First of all, a setback for the rally in the Aussie dollar against the US dollar. The Aussie actually now down 0.11% on the day, and you can see there that's playing back into that weekly trend of weakness, if I can put it like that, in the Australian currency. Elsewhere, staying in Asia though, the Japanese yen appreciating against the US dollar. Interesting that we should see yen appreciation when the Japanese are on this extended Golden Week holiday, and so it's just creeping up perhaps by a bit of stealth against the US dollar, improving by 0.12% overnight and bringing weekly gains for the yen to 0.32% against the US dollar. Elsewhere though, the dollar was on the front foot. It's taken a little bit more money off of the Mexican peso, 0.09%, not a great move there, but I just wanted to reiterate the weekly trend there, which is for the dollar to be strengthening against the Mexican peso, and it's taken 0.67% off of the Mexican currency over the last 7 days. Dollar index for itself a little lower, down by 0.06% this morning, although on a weekly basis it's still up by a 0.16%. Elsewhere, the dollar is back on the front foot against the South African rand, adding a further 0.12% against the South African currency and bringing its weekly gains to 0.55%. Obviously lots of key data out today, as we'll see in a moment. It'll be very interesting to see if that can stimulate some more activity in the FX markets over the course of today and tomorrow. Okay, what's on the calendar? Events that may move the markets today then? Well, as I said, it's a pretty busy calendar, and we've already had some pretty crucial data out of China this morning. Both the MBS manufacturing PMI and non-manufacturing PMI reads for April, and they were accompanied by the Caixin manufacturing, the private sector manufacturing PMI read for the month of April, which was, at least according to my calendars, due to be released on Thursday, so an amendment there to the scheduling. Nonetheless, we get a chance to compare them all together, and as you can see, they were in the red and somewhat disappointing, and more on that a little later on in the video. To come then this morning at 6 a.m. GMT, we'll have GfK consumer confidence data out of Germany. And this an early look at how consumers are thinking about the month of May. Then we hop over the border into Switzerland at 7 a.m. GMT for KOF leading indicators from Switzerland for the month of April. At 7:40 GMT, we're back in London for a speech from the Bank of England's Ramsden. And then at 7:55 AM GMT, we're back in Germany for unemployment data out of the country for the month of April. 5 minutes later, we're in Italy for unemployment data for March, so a chance to compare a leader and a laggard as far as employment is concerned in the Eurozone economy there. At 9 a.m. GMT, we'll get perhaps the pick of the day's data in the form of gross domestic product for Q1 out of the Eurozone, and here we see a year-on-year and a quarter-on-quarter preliminary reading then, as I say, at 9 a.m. GMT, and that'll also be accompanied by unemployment data for the month of March from across the whole of the Eurozone. We pause then until 12 and cross back into Germany for the harmonised index of consumer prices, a year-on-year measure for the month of April. Remember that this is the EU's preferred measure of inflation across the Eurozone. And then at 12:30 we're over the Atlantic and into Canada for gross domestic product from that nation for the month of February. At 1300 we hop over the border to the US for Case-Shiller home price indices data for February, and at 13:45 it's the Chicago Purchasing Managers Index data for the month of April. That's followed at 1400 by consumer confidence and pending home sales for the month of March. Then at 1500 we're back in Canada for speeches from the Bank of Canada's Governor Polis and Bank of Canada's Wilkins as well. And then we take a break until 22:30 and we're in the Antipodes again for the AIG Performance of Manufacturing Index for April. And then at 22:45 it's unemployment data for Q1 out of New Zealand. Right then, breaking news and comment that's caught my eye overnight. And first of all, China PMIs show an unexpected slowdown in economic activity in April. As I said, it was across manufacturing PMIs and non-manufacturing PMI data, and that's not what the market was expecting, as we'll see momentarily. Staying in Asia, Korean conglomerate Samsung has reported only a limited improvement in demand for memory chips in figures it released overnight. That's interesting because, of course, we have Apple reporting after the close in New York tonight, and memory chips, of course, a key component of mobile phones and mobile devices. So could that say something about the demand for those Apple devices? Meanwhile, White House economic advisor Larry Kudlow has said that weak inflation in the US opens the door to a rate cut, and that he remains optimistic about a US-China trade deal. So some pearls of wisdom from Mr. Kudlow there. Meanwhile, private sector credit growth in Australia has remained at 3-month highs during March, with higher business lending offsetting slower housing loan growth. Okay then, food for thought and something to take away with you into the trading day and beyond. And why not think about this? A surprise slowdown in Chinese manufacturing during April has put the spotlight back on Beijing and the People's Bank of China. Can they or will they do more to stimulate the domestic economy if this blip in April becomes a trend? And the chart here from the FT plots the MBS official manufacturing PMI against the Caixin, the private sector market manufacturing PMI surveys, and as you can see, both were recovering, but now both have started to turn lower once more, staying above this key 50 line for the moment. But of course, Beijing and many others in the market would have wanted that trajectory upwards to continue. So over to you, Beijing and the PBOC, I would suggest. Okay, it's a risk warning time. Please do take a moment to read this risk warning, as trading CFDs and foreign exchange and margin can be risky business. If you're in any doubt about those risks or the suitability of leverage products for you, then please do contact your Pepperstone account representative. And as I say, do take the time to read this risk warning thoroughly, please. Thank you for your time today.